Good morning, good morning. How's it going, guys? Some slight technical difficulties this morning. Sucks. When the computer works, it's beautiful. When it doesn't, it drives me mad. When technology is working, it's a wonderful thing. But when it doesn't, oh boy, oh boy. How you guys doing today? Can't get my camera to work. Camera doesn't work. Nothing wants to work. That's okay. Market's working though. Market's working really well. We're going to look at it. We're going to take a look at gold. Last time we really seriously were talking about gold. We were talking about how price was likely going to consolidate for the week of May. Do you guys remember that? We were talking about that a few episodes back. Well, maybe, I don't know, many episodes back. We were talking about it, I think in May. I think it was. We were talking about it. Or April, sorry. I said May was going to be. Yeah, that's right. It was in April that we were talking about it. So, so what's been happening since? Well, let's take a look at the monthly chart. This is important. Okay. So here was April. We got the long candle in March, big move to the upside in April, but then it came back quite aggressively. We didn't end up getting price closing at the highs, which is okay. You know, that's fine. Yeah. So, but I said likely what we were going to experience in May was some consolidating, and so that's what's really taken place. If you look at the chart here, it's just consolidated, and for all of May, right? It's just gone up and then back down. So if you look at the weekly chart, take a look at this. Okay, look at that. Let me just get my pen here. If you look at this, okay, this is all keeping within a range here. Okay, so this is exactly what I wanted to see, and there are reasons why I wanted to see this, because we just experienced a really significant move to the upside, and for it to be sustained, okay, we need some price action coasting sideways. Now, typically when it coasts sideways, we can look at the CFTC data and try to get some insight as to what the banks are doing at that point. Are they going to offload? Are they offloading positions? Are they putting on more positions? So that's what I typically like to do when I see price consolidating like that. But another good reason why we would like to see consolidation like this is because if price is going to rest, it's going to be in preparation for either a big move down, which would be great, because then we will go back to the origin of the move and then watch for bullish signals, or price is going to break up to the upside and start heading even higher. Either way, we've got a system in place that's going to locate where our entry point should be. Okay? What you should never do is just buy when price is coasting sideways like this, because where do you put your stop loss? You know what I mean? Where are you going to base your risk? A lot of people, they see a big move up in gold and they read articles and this and that, and they're thinking to themselves, oh, maybe it's a good time to buy gold. Well, you shouldn't be focusing on that. Okay? One of the reasons why, or one of the things that I extracted from years of studying the markets was the reality of how the markets move. When you're not paying attention to the media, when you're not paying attention to the support and resistance and EMAs and all those indicators that the banks would love for you to have on your charts. Okay. They really would. And how do I know this? It's like, well, look, if I was a banker, all right, if I was a banker, if I was running the trading department at JP Morgan, facilitating trades, okay, and playing a role in controlling the price of the markets. Okay, it's not just him, but you look at all the big banks that contribute to the movement in the markets. They play a large role, right? You know, as we've talked about before, the big banks are to facilitate price action, right? Are to facilitate the orders of everybody else. But in reality, do you think they want to be selling gold to us if they think it's going to go higher? No, not really. They don't, right? So when you start to recognize what really drives the market, and you start to prioritize what you focus on, and you start to exclude the noise, it's incredible what starts to come to your mind. It's incredible what you start to discover. And so I'm a person that loves to study things. As I've mentioned to members for years, I've always been into magic, magic, illusions, magicians, all that type of stuff since I was young. And one of the great things is when I was young, there was no going on YouTube and looking up how a magician did something. Okay, I really didn't even have internet when I was young, so it's like you watch the magician perform, and I loved it so much I wanted to figure it out. Well, there's only one way to figure it out, and that's to watch it over and over and over again and look for little signs of what is actually happening. Why is it moving like that? Why is his hand moving like that? Why is he standing in front of the girl at that point as she's entering the box? Did he need to stand in front of the girl? So I would question everything. And it was a good thing that I was like that, because years and years and years of being like that, I created my analytical skills. I had no idea I was doing that at the time, but that's what ended up happening. I created my analytical skills, not that I was being taught that in school. And I've just worked on that, throughout my life, and always focused on that, and always been that type of guy. So when I faced this new challenge of learning how to trade the markets, I was like, okay, well, I want to first understand how the markets are moving. If you don't understand how the markets are moving, then, how are you going to trade? And, when I started seeing what other people were doing in terms of analysis, I was actually quite surprised, because to me, it seemed very childish. Here we are, grown adults, right? Most of us looking at charts, drawing trend lines and lines here and boxes here, and then adding moving averages. I'm like, what's the sense of all that? You'd only need those type of indicators if you really, truly didn't understand what was going on in the charts. So as I started understanding what was going on in the charts, and I started to discover a lot of things, I started to take notes of those things that I was discovering, to see if those things were things that were repeatable. Were the banks doing these things over and over and over again? I mean, every time they create an ascending trend line and price action moves this far away from the trend line, and then after the second point that it contacts the trend line, the move away, when it looks different than the original move, what does that usually tell me? I studied these things. Okay? And what I learned was, when the second move up doesn't look like the original, it tends to be that trend line is likely going to break. That's what I found. Okay? And I've done well over 40,000 hours. You know how they say you need to do 10,000 hours of something before you're an expert? To me, I think that number doesn't work. 10,000, I was not an expert, by all means. I've done over 40. Well over 40,000 hours. And I think I'm pretty good at the analysis. I wouldn't say expert, because I know how much more there is to learn. But the knowledge that I have grasped over the years has been quite extensive. And so all these countless years, countless hours, I should say, of studying and taking notes and looking at the charts to discover whether or not these things were repeatable, if they were doing it over and over again, I created a system. A system was born out of this. I call it the Sherlock system, because it has to do a lot with analyzing charts and discovering truths about the situation, looking for evidence to suggest something's going to happen. Like this situation with this ascending trend here. The evidence was suggesting that it was going to break to the downside. Why is that? Because of the several times I've seen situations like this. Okay. So I had already an inkling that this move to the upside was not going to be sustained, even though back here with this massive move to the upside, I was already suggesting that in May we were likely going to get price to coast to the side, right? And so, when this happened in May and this formation was created, I knew with a high degree of certainty that the price was likely going to come down and continue on with the sideways action. Okay? But this took many, many years to discover this type of stuff. Many years, a lot of hard work. And so the Sherlock system was born. And when I started doing analysis and sharing it on social media, people started asking me, how in the bloody hell did you know that? How in the bloody hell did you know that that was going to happen? How did you know price was going to drop at exactly that moment? How did you know that? Well, those countless hours of studying the markets, I discovered how to locate institutional supply and demand. I mean, there were other people doing it, but from what I was seeing, they were doing it wrong. And there were very specific reasons why they were doing it wrong. See, the thing is, you could come to know things, but it depends on whether or not you continue your studies to discover how well those things really are known. You could come to believe things, but it's not unless you continue to dig deep and research and study that you could start questioning those beliefs and see whether or not they hold strong. Okay? And I'm a person that just questions and questions and questions. I come to know something, all right, I know it. But then I keep researching, keep studying to see, is it 100% true? In what circumstances is it true? Is there any doubt? Is there any other evidence to suggest otherwise? And this is the foundation of what we teach at the school here. Because so many people were interested in learning how I was discovering these supply and demand zones, how did I know price was going to move? How did I know a trend line was going to break? Because so many people wanted to know, this is how the school was born. And as you've probably seen, we're going to be starting a new class next week on Monday. And I made a post about it here on our blog. We'll get back to the charts in 1 second. I just want to show you something here. I made a post about it here because we're going to be starting a new class. And in my eyes, it is the world's most advanced trading system. I've seen what other people are using to trade, and it doesn't even compare to what we're doing. And the feedback I've received from hundreds and hundreds of students that have tried different supply and demand classes and tried different educational resources to learn how to trade, they come to our school and they say nothing compares to what you're teaching. Okay. Now, there's a lot of guys out there with fancy marketing videos and fancy websites and fancy this and fancy that. Well, that's because they're spending all their time making fancy marketing videos and making fancy websites. I spend most of my time studying charts, okay? Which is what you want your professor, your teacher, your instructor, your whatever you want to call me. That's what you want them to be doing. If they're not studying charts all the time and working on their knowledge and fine-tuning their knowledge, that's a problem. Nobody can sit stagnant. You can't say, I have a system, it's very easy, 1, 2, 3, and that's all you need to do. Nothing is that simple. I can assure you right now, nothing is that simple. Okay? And you could figure it out yourself, or you could come to learn that. But we're starting a new class, and this is what we're going to teach here. We're going to teach you how to locate institutional supply and demand, how to locate the trend lines that the institutions observe. Believe me, the institutions observe trend lines. They do. How do I know this for a fact? I know this for a fact because when you see the trend lines that the institutions create, you know which ones they are likely going to use to facilitate a move higher, okay, in terms of an uptrend, and you know which ones they are likely going to break through, you know, like here on gold. But what do you think was happening here when price came down to that trend line? What do you think was happening? What do you think retail traders were doing? All their conventional books tell them, draw a trend line like this, you know? All their conventional books tell them, oh, here's a trend line. You can connect a low and there's a new high. Like, the idea is just so simplistic, you know? They make it so simple. It's like the level of reading that they teach in school, right? Some say it's level 6. No matter what level you go to, school teaches you how to read at a level 6. Why do you think that is? So that you can never read a legal document and truly understand what's happening. You know, you can never really read a historical textbook and understand what they were actually explaining. So what do you think when it comes to technical analysis? They're going to teach you the real true art of reading charts? No, nobody will. So you see simplistic stuff like this. Draw a trend line to the upside if you have a low. If you have a low and then price makes a new high, you know, it's like, you know, teaching an adult how to read at 6th grade level. And then you wonder why you don't understand things. Well, because your level of understanding is just ridiculous. So, so we're starting a new class on Monday. We're going to teach you how to read the charts at an expert level, at a level so deep you've never seen anything like it before. But if you really want to challenge yourself, you really want to understand the markets on a deeper level, I would encourage you to come and join us. You have to sign up, become a student, and then we have a whole library of stuff that you could watch and get ready for class on Monday. So quickly, gold sitting sideways, just as we suspected. You see how powerful this knowledge is? That last month, I said May was going to go sideways, right? You know how many options there are that you could trade knowing that gold was not going to move higher in the month of May? You would have made money on? Yeah. Or how about just saving yourself from going long gold when it wasn't the right time? Yeah. How would you like to know exactly how to enter gold when it is the right time? How would you like to know that? Because right now we've got this situation with gold, right? How many things can happen in gold? How many things? This can happen, right? It could rally from here. It could rally from here. It could drop down, then rally, drop down even further, then rally. So many things can happen. How do you know where to enter gold? You know, if you don't have certain knowledge of how the market moves and the supply and demand that comes into play when certain zones on certain time frames are contacted, how would you know how to enter a trade? You wouldn't know. And we teach this at the school. Exactly what are these signals? Okay. So we're going to wait because, yeah, soon there's going to be signals. Definitely bullish gold. We're definitely bullish on gold. We've always been bullish on gold. We've just been waiting for it to make moves and waiting for the banks to play their cards so we could see how it's going to play out. But bullish on gold for sure. Nat Gas. Bullish on Nat Gas. Okay. Look at our trade that we had. Here's going to show you a trade idea once this chart decides to load up. Don't know why it's taking so long. But we had a long signal on Nat Gas. And we had a long signal on Nat Gas down here. Okay. Long signal down here. How would you like to know with a high degree of certainty that Nat Gas is going to rally from the lows here? That was $1.70. Our first target was $1.99. Hit. Our second target was $2.55. Hit. Our third target is $3.09. Not hit yet. Just like magic. Okay. The timing. Would you like to know the timing? When you should get in, how long it should take for it to play out. Okay. This one worked just like magic. It looks like magic. After it plays out, you look back and you're like, how did that happen? It worked out just so perfectly. Well, yeah. When you have the correct knowledge, it tends to do that. Euro. Remember Euro? What did I tell you? Dynamic shift. The dynamic of what is taking place is shifting. I said price was going to drop down. In the Telegram channel, I posted the analysis. I said it's soon going to be the time where we're going to see that drop in price. And it dropped to where exactly? To exactly at our demand zone. At 107.89. I mean, what? That's within a couple pips it dropped into our demand zone. And then what happened with price? Upwards. Okay. Why is it moving upwards? Because it's hitting a demand zone. That's why. And there's a dynamic shift taking place here that suggests to us that over time we could be seeing a bigger push to the upside. Okay. How valuable is this information? Ask your typical trader how valuable it was to know that price was going to drop from here down to here. And then after that, price was going to rally up. And then ask him in a couple months how valuable it was to know that it was going to very likely head even higher from these areas. Yeah, they'll be pretty darn happy with that information, because if you ask your typical trader right now, they're like, nobody knows what direction the market's going to head into. Nobody. So you have to just trade the odds, trade the formations. It looks bullish, go bullish. If it looks bearish, go bearish. Okay. You don't think within this situation here, the banks are going to make it look bearish many times on many time frames? You don't think they're going to do that? Of course they are, because that's what they do. All right? That's what they do. You don't think they know most traders are looking for bullish and bearish candlesticks, or waiting for certain data to come out to indicate a certain move is going to take place? Don't you think they know that? Of course they know that. You think there's trillions of dollars being traded every single day, and they're not focusing on what everybody is thinking about before they pull the trigger on trades? Of course they are. So it's good information to know the direction that things are going to head into when you track the supply and demand from the big banks, and you know the sequences that are expected to play out. All right, folks, that is it for today. That's it for the end of your week. That's it for your Friday. I won't go into any more in-depth. I think I gave you a lot. I think it was very good. And again, if you want to join and you want to learn, there's only so much I'm going to teach you and share with you on these morning sessions. I don't want to give away too much because if you think what we're giving away on these shows is good, wait until you see what we share with you in the classes and at the school. Anyways, I won't take up too much more of your time. I will let you go. Thanks for joining me this morning. I appreciate you being with me and sticking through the technical difficulties this morning. And that's it. You enjoy your day and have a good one, everybody.